Okay, this is going to be a quick video on support and resistance, what it means, why they are what they are. I think the most important thing to remember when we're talking about support and resistance levels is that it's about the psychology of trading. Any of this technical analysis that we do, it's strictly about the it's not strictly about it, but in most parts, it's about psychology and in technical analysis and people's interpretation of the charts. There is obviously there is some fundamental reasons why a stock would find support, or it would, trade at it would stop at resistance based on its book value, earnings, all those kind of things. But from our point of view, really, it's because we're technical analysts. We're looking at just the psychology of the trade. So this is CONN. I mean, I just had this for a while, back in 2017. You can see here and here is resistance. Resistance is the easiest one from a psychological point of view on why it is what it is. A stock gets up to this area here. Now this line that I've drawn across here, we just touch as many points as possible. But we see we have a point here, here, and here. We can't really draw this line here though at this point until it pulls back and then gets back up to there and fails. That's your resistance level. And why is it resistance? Well, there's a whole bunch of people that bought stock down in here. And it gets up into this level here and fails, or it kind of failed and then has a little spike up, pulls back. Don't forget, people were buying in this point though, at this point. People were buying all the way up. And then it backs off, tries it again. There's still more people buying, but also selling. And the short sellers now see that this was the high point. So now this area here, the short sellers come in. Anybody that bought it in here, and maybe they bought it here, and they see that it's pulling back a bit, and it's just about back where they got it, they become sellers. And then the stock sells off. We'll talk about support in a second. Then it bounces back up. Now, the reason that this is resistance, the reason it was resistance here, is because all those people that bought here, call them the bag holders, their significant other is going, are you crazy? Why did you buy that? Look, it went way down. If that gets back close to anywhere near where you bought it, you get rid of it. Could be the angel sitting on one side of your shoulder and the devil sitting on the other. The point being is that from your own experience that if you bought a stock and it backs off, you're thinking, man, if it can just get back close to where I paid for it, I'm going to bail out of this thing. And that's why you get resistance. But to compound that, the short sellers know that there's all these bag holders. And so therefore that's the area that they're going to start to sell, because they know that there's people want to get out of the stock because it failed there. So let's talk about support. We see that there's a fundamental reason probably why it's trading at this level, pops up, comes back, and the short sellers that were in here and the dip buyers know from a psychological point of view, this is where the buyers are going to come in. They're going to cover their shorts here. This is the support line. And sure enough, it did. Pops back up, fails. Now, this time it gets through the resistance level. This line now becomes support. And the new top here is resistance. And the reason now this is support is because there's short sellers in this trade and they want to get out. And they know that the best that they might get is if it pulls back to an area where it broke out. So they put in the bids. And as well, buyers know that that from a psychological point of view, if I want to get in as cheap a price as possible, this is probably going to be the spot. And so therefore, a self-fulfilling prophecy, they all put in their bids there, and sure enough, that becomes the support, and it holds support. So that's how support and resistance is developed, or is made. Strictly psychological, but it's the sum total of all the traders in the market reading a chart and deciding where resistance and support is. Okay. So now I draw lines on these charts. This is the daily chart of PLUG. This was a recent swing that we just put on. And we can see in this chart here, this was a double bottom for it in this area. So this was support. Here's your support line. It's easy to draw. This was some resistance. You can see that this had resistance here, the bottom of these ones here, the top in there. That's what I would call minor support or minor resistance, depending on what side of the ledger the chart is at, or the price is at. And then you can see this is the breakout, and this is why we put the swing on. This is a breakout through resistance, now becomes support. You find these areas I mean, this is my extreme of my charts, right? The supports and resistance. Why do I draw all these lines? Well, you can see that this point here, these points here, and that's where it stopped. That's your support. This is your February, this was your February high here, this line. That's major resistance. Anytime you have a big market top like that, that becomes resistance. So it needs to get through that 33.90. And then you can see in here, these tops in here, that's the next resistance. Then it doesn't come into real resistance again until it gets up to the 35.83. So it's really just a matter of trying to connect as many dots as possible when you draw these. Some of them are going to be minor support. Some of them are going to be major support areas. Like this would be a major support down in here, 3,000. It's a round number. It's got these big bottoms, double bottomed here before the next wave took off. This is big support for it here, 31.90-ish. It's the bottom here. This is the big resistance here, the 33.90. So it's just it's a point where markets decide that it's gone far enough, and then those people that are in that trade need to, if it ever gets back close to that, they want to get out of the trade, and the shorts know that that's going to be a resistance area because people want to get out of the trade, and therefore it's a self-fulfilling prophecy, and that becomes resistance. And so we just draw these lines in there just to sort of give us a reference point, a much easier reference point. But the other thing you have to remember is that it's not an exact science. They may pop up through it, and we see that quite often when you get the fake out breakout. Let's see if I can find one that had a fake out breakout. This morning on here, we could see that this was looking like it was going to break out. You get that big long wick up. Now, there wasn't any follow through, but I just want to show that wick, and then it did sell off sharply. That now is a big area of resistance because all these people, this big volume, all those people that bought in there are wanting to get out because it's come back at least to close to where they bought. And then, of course, all these people down here that bought saw that spike and it did recover. So now they think I got to get out of this trade. It did continue to go, but that becomes the resistance. But it got through it and pulled back. Now it's support. You can see, but like I say, it's not an exact science. It supported, touched down through it a few times, but held the support and away it went. Here's your support. Here's your support. Maybe we need to, and in this case, it coincides with the VWAP. So that's support and resistance.